Good afternoon and welcome back to the channel. This video is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. Okay, so in this video, I want to talk about risk and the crypto market, but I'm going to cover it from a different point of view than how it is traditionally covered in this space. So I'm going to talk about the risk of getting out of the market. I did a video last summer titled Risk in Getting Out of the Market, but I'm going to cover different topics and different issues in this video specifically. Now, when I'm talking about risk, I'm talking about Bitcoin and the blue chips. I'm not talking about everything else. Those are on a different risk spectrum than the blue chips, and they're in a different universe. All right, now that point does not get made enough, and I should make the point more often. But it's really important to add clarity and context to that, because the blue chips, the ones that have institutional adoption, large VCs backing them, they're being used by corporations, those are in a different category, all right? So I know what this is, you know what this is. Now, I know how much crypto I have. Now, not the dollar amount that it says today. I know how many XLM I have, how many Algorand, how many, just go on and on down the list. Polygon, Cosmos, ICP, right? AMP. I know how many of these things I have. And I know what their market cap is. I know what the general growth potential is, the range, okay? So I've done conservative projections and more aggressive projections. I recommend people do that. I've done videos on this, meaning I take all the cryptocurrencies that I have, I put in a spreadsheet, and then I put the amount of tokens that I have of each of those cryptocurrencies. I look at their market cap, and then I do two different numbers. I do a conservative projection. I know everybody wants their thing to go a million X, but I think it's important to do a very conservative projection. This means it gives less of an ROI than what you're expecting, all right? But a reasonable number, and then a more aggressive projection, and then you can look at the range that falls in. But I've ran these numbers. Now, I know that if I don't buy anything else, and I just ride out with what I have, that I'm going to be good because I've ran my projections, and unless there's a world-ending event or I get hacked or lose my keys. Outside of that, I don't see any other scenario coming up that's going to put me in a jam with my portfolio, my holdings. And so I look at if I do nothing, what is my chance of success of achieving what I set out to achieve when I got in? And I put it at 99%. Because I'm 99.9%, because I put the likelihood that this will be continued to be implemented. I put the probability of that at 99.9%. So if I put that as a near certainty, this is just my opinion, this is not financial advice, that they're going to continue to implement the system, then I know that if I just do nothing and just sit on what I have, that I have a extremely, extremely, extremely high likelihood that I achieve what I set out to achieve by getting into this market. So if I know that, and that's a reality for me personally, then the amount of upside that would have to be available for me getting out of the market would have to be significant. And this is what I mean by that. So let's say it's 35K Bitcoin, right? Now let's say I think it's going to drop to 25K. So I'm going to get out of the market and then get back in when it's 25K. And I have 30 different positions, so you have to take all that into consideration too. You have 30 different exit points and entry points. So I get out at 35, let's say it drops down to 32, but then it starts just bouncing between 32 and 35 for a few weeks. I go to sleep one night and I wake up and it's at 40K because Mexico signed a bill to make Bitcoin legal tender, or Russia central bank decided to buy a ton of Bitcoin, or one of the other numerous catalysts that are out there. They decided to do oil trade in Bitcoin, all right? None of those things happening are out of the realm of possibility. I could list off a million other things, but I'm just doing a thought experiment. So I wake up and now it's 40K, and huge announcement just came out. Major country just made Bitcoin legal tender. And now I'm rushing to get back in. Now, where is the capital? Where's all my capital? Like when I got out of my positions, where did I put all that capital? It could be in one of a few different places. Let's say it's in my bank account and I want to get back into all of my positions now. Well, what if, markets are unhinged at this point? And what if, guys, we're going into an economic reset. We're in the middle of an economic reset. So let's just say that banks collectively decide that they're not going to let people withdraw more than $2,000 or $5,000 a day from their checking account because they don't want to run into liquidity issues. They don't want to have a digital bank run. So they limit the amount of withdrawals that you could do per day. And, okay, we use 2 or 3 different banks. So, okay, well, what if they all do it? Okay. What if certain banks are down? What if there's a cyber attack? All right, so that's the bank situation. Well, that's why you leave it on stable coins and you leave it on the exchange. Okay, awesome. What if the exchange is down? Just had a major catalyst. There's tons of volume now. There's tons of volume coming into the market. What if the exchange is down that I have my stable coins on? Will you spread it out through different exchanges? Okay. What if, one of my exchanges is down and the other 2 are live, but I have a ton of stable coins on that one exchange. I have a third of my stable coins on that exchange. And I'm trying to play catch up at this point. Or I could have them in stable coins on my external wallet, which in that point, I have to bring them back onto the exchange to make my purchases, or I have to use a DEX in which I'm limited on which cryptocurrencies I can swap for. So the point that I'm making here is that for me personally, if I do nothing, absolutely nothing, the likelihood of me achieving what I set out to achieve is 99.9%. I put it at the same likelihood of them continuing to implement the new system. So the upside of trying to time the market and getting out and then getting back in, there's not enough upside for me. Even if, let's just say, speaking hypothetically, that I got out at 35 and I got back in at 29 or 30, 25, whatever. And let's just say that net, I added 20% to all of my positions by getting out and then getting back in. That would be a phenomenal scenario. I don't think that I could hope for much more than 20 to 30% added to net to my holdings. That would be a phenomenal scenario. But at the same time, knowing what I have currently, knowing how much I've accumulated currently, it is that amount, 20, 30%, best case scenario for me. Obviously, I guess it could be more if if just the red carpet was rolled out and everything just worked out perfectly. But that is not nearly enough for me to take the risk in running into one of those numerous different situations that I laid out, which are not out of the realm of possibility. Because I know what I already have currently, and I know, even if in conservative projections, where that's going to be 10 years from now. The range, at least, okay? Anything could happen, but, we can look back historically, and we know how these technologies are going to be used and are already being used. So when I'm looking at this, there's just not enough upside in trying to time the market, especially at this level. Maybe if you wanted to have this conversation, in the 50s, but especially not at this level. In best case scenario, I net 20% to my portfolio. Okay, that's great. But it could very easily lose 20% net to my portfolio. So then it goes to what's the confidence level that I have that I can successfully get out of all these positions and then get back into these positions without net losing. And the confidence level is not very high. And there's not a whole lot of upside. But there's a ton of risk. There's a ton of risk for me, maybe not for you. You might have a higher degree of confidence that you can do that successfully. And some of you, and you guys, there's professional traders out here that do this stuff for a living, and they are successful with what they do. And then there's everybody else that just, wants to be a trader and that thinks that they can time markets and thinks that they can beat Wall Street and that thinks that they're smarter than the big money. So that's the point that I want to make. I also want to make another important point right here. The price changing, all of your positions could go down by 50% today. All of them, right? So if let's say Stellar. Let's say Stellar drops by 50% today. That will have zero impact on the long-term price point of Stellar or any other cryptocurrency. What happens over the next 30 days or 60 days with the price is going to have no impact on the long-term price point of where it's going. All right? So That's important to know. So when I'm looking at this, I say if I do nothing, I'm good. And I'm taking a very, very, very small, little to no risk for me. All right, that's my opinion about my degree of risk that I'm taking. So for me to assume more risk when I know I'm going to be good doing absolutely nothing, for me to assume more risk, there would have to be substantial upside. And in this case, there's not. And there would have to be, I would have to have some degree of confidence in my ability to do that successfully. Also not there. So there's not a ton of upside, even if I time it perfectly. There's not a lot of upside, and I don't have a very high degree of confidence. And I compare that to me just doing nothing and being good. So it's a very easy decision for me. But you have to look at, or you can do whatever you want to do, guys. Guys, you can sell everything today. Listen, this is the great part about this whole situation, is reality is going to play out. And we're going to be able to look back and say, okay, this was the right approach, that was not the right approach. Because if we just look back throughout history, with Bitcoin specifically, this applies to most markets. If you look back at Bitcoin historically, what was the right approach in 2015, in 2013, in 2012, in 2016? What's the right approach throughout all those years? Just DCA and hold. The people that did that are better off now than 99% of the people that were jumping here, there, and everywhere. I'm sure there's a small percentage of those people that came out in a better position because they timed the market accurately. But for every one of those, there's tons that didn't. So I just wanted to make that point. That's really all I have for this video, guys. Let's see if I have anything else written down here. And yeah, I don't have anything else to say. That's pretty much it. Please make your own decisions. Make the decisions you have the most confidence in, and look at where your net worth is distributed and make sure that you are happy with where your net worth is. Again, the stakes are getting very, very high. And I'll do another video later tonight or tomorrow about all the other things that are going on all around the world with China, with Russia. All these things look like they're escalating. Gas prices are starting to go back up. Markets are starting to look very, very suspect. And I think at this point in time, or very soon in the immediate future, people need to put their resources where they want them to be for the next 6, 12 months, 18 months, and they need to step back and just say, okay, this is where I have the most confidence. This is where my net worth is. Wherever that is for you. That could be Tesla stock. That could be gold. That could be a house. It could be anything. It's whatever it is for you. So that's all I have for this video. I did add some to my portfolio. I will put that in my community tab after this video. And that's not to say that I don't think that we could go lower. I don't care if we go lower. Guys, I've been saying this for a year. It doesn't matter to me. This has been, the last 6 months has been a blessing. I never in my life thought I was going to accumulate this much ICP. Guys, I doubled my Algorand position, which is looking great right now. Of course, I was waiting for Algorand to drop back under 60, and now it's up at 77 or something insane like that, while the rest of the market is still in the deep red. But, I doubled my Algorand position, all right? Because I had originally bought Algorand around 75, 80 cents, and then it took off to 150 and then over 2, and I was just like, well, I'm not buying, I'm just going to wait. I don't think it's coming back down under $1. Sure enough, it did. And I was able to double my Algorand position. I am thrilled. Could not be happier. I increased my Stellar position by, I think, 20%. This has been a gift, in my opinion. You might feel the opposite way, but that's how I feel about this. I never in my life thought I would have this much of the blue chip cryptos accumulated. And so now that I know that I have those accumulated, and I know in a general sense a price range where they're going long term, there's no incentive for me to try to gamble, because that's what I would be doing, is gambling. That's all I have for this video. Thank you everyone who has liked, shared, and subscribed. This was not financial advice. Take care. Have a good day. I'll see you in the next video.